You know Shaletta makes you laugh, but did you know Shaletta Brundage can also make you think and boost your business? Media personality, activist, and comedian Shaletta Brundage founded Shaletta Makes Me Laugh to celebrate and share the best of Black culture. It's a podcasting platform. You can download 10 weekly podcasts hosted by African-American subject experts at ShalettaMakesMeLaugh.com or wherever you find your favorite podcasts. ShalettaMakesMeLaugh.com is also a production house, creating broadcast quality commercial content. And Shaletta and her team of storytellers create powerful promotional campaigns to get businesses the brand awareness they're looking for. Some of Minnesota's top businesses trust Shaletta, and you can too. Get out the word about your events and products and get in front of communities of color with ShalettaMakesMeLaugh.com. She's got the power to help your business.
Hey everyone, and welcome back to another episode of the Financially Fit Podcast. I am your host, Andre Creighton. As always, you know I'm excited to be here with you all today, and I'm really excited about this topic today because there is a lot happening in the stock market right now, and I think it's a really good time for us to really take a step back and really try to understand what is actually happening and how that is, uh, how we should be looking at the stock market and portraying the stock market. As I always mention, like, I'm not a financial advisor. I'm not a licensed investment advisor. So all of this is just my opinion. I'm not giving financial advice. However, I am a CFO. I do work with a lot of companies on a day-to-day basis, and then I also play in the stock game quite a bit myself. So I'm giving you how I am portraying the stock market and how I'm looking at the stock market. So I'm really excited to jump into this one with you all today. But first, I'd like to thank everyone that continues to listen to our podcast across our various platforms. We're seeing our numbers increasing every single week, and I really appreciate it. For those that are new, welcome to the podcast. I hope that you find something that is fruitful out of our conversation today. And if there is something that you find fruitful that's helping you on your journey to being maniacal every single day towards your goals, please share it with someone else, whether it's a friend, it's a family member, a business partner. Please share the podcast with someone so we can continue to grow our audience and continue to build more maniacal individuals that are focused on really the marathon and not the sprint. Because at the end of the day, what I always say is this is not the place where you're going to find the silver bullet that will fix all of your financial woes. This is the place where you are going to get some perspective to help you on your journey. So without further ado, I want to jump in. If you've looked at the stock market recently, you've probably seen and have thought, what is actually going on? And you're not alone. One day the market feels strong, the next day it feels shaky. And, really at the end of the day, headlines swing from optimism to panic. And sometimes that's even within the same week, which I know for a lot of people can be very confusing, especially individuals that are just starting out in the stock game. So today we're not here to predict the market. We're here to understand it. And because the market, it doesn't, in my opinion, it doesn't need hot takes. It really needs clarity. And, if you ever listen to anything that I talk about in my life, I'm always talking about how clarity is core to anything that you do in life. So we're going to start this segment out by talking a little bit about the temperature check. And really, I like to start here because I think from many people's perspective, they feel the market is crashing. And what I'm here to tell you is the market is not crashing, but it is uncomfortable. And we've seen, large daily swings up and down. And, what that usually tells us is that, investors are just uncertain. There's a lot of uncertainty in the market. It doesn't mean that they're scared, but it does mean that, there could be some people that are fearful. There could be some that are optimistic, or there could be some that are pessimistic. And fear looks different for everyone, which I think in some instances we're seeing some people rushing for the exit. So uncertainty looks, in my opinion, like money moving quickly, trying to find its footing. And that's what the market feels like right now, is people are really trying to find their footing on, like, where should I be housing my money? Where should I be putting my money? And you know, the I think that when you see big moves, it doesn't necessarily mean that something is broken. What it usually means is that investors are debating the future in real time. And, at the end of the day, that's not panic. It's just indecision. And with indecision, it causes people to be on this brink of, like, do I keep my money here? Do I move my money elsewhere? And I think it all goes back to everyone has different strategies around how they want to attack the market too. So when you put indecision at the core of it, it causes some of these large swings. And that's where we are today. And I think it's important for us to maybe jump in and talk a little bit about AI and tech, because that is a lot of the reason why we're seeing these large swings. You know, so in my opinion, a lot of the noise is coming from the AI and tech space. For a long time, AI was treated like the guaranteed win. I think, if a company said AI, the stock went up. That was just what it's been, because everyone's on this, like, trend of, like, trying to find, like, what is the next big AI company that's going to boom. It's very similar to the dot-com kind of phase that we went through over a decade ago. And what I'll tell you is that, um, that phase is over. That AI phase is over. Investors are starting to now ask some of the hard questions. The questions that, like, who's actually making money from AI? Who's spending heavily without clear returns yet? And how long will patience last? So, we've seen tech stocks really start to sell off, and not because AI failed, but because expectations got too high and too fast. So, this is what we call maturity, and this is what maturity looks like, is when there's this new phenomenon, we're all kind of rushing in because that fear of missing out is what catapults us into sometimes said stock, especially if we are individuals that are um, new to the game, and we don't want to be left behind. I will tell you and give you a quick story. I remember back in, I think it was 2007 or 8, somewhere around that time frame. I was, I'm sorry, 2000. It was around 2010, um 10, 11, somewhere around there. I was a college student. I was back home from college for the holiday or something like that, and I was out doing what 20-year-olds, something year olds do, partying with some friends, and we had taken an Uber. And as you can imagine, like, I had had a few drinks, and I was in this Uber with a couple of buddies, and our Uber driver started talking about um, Bitcoin and cryptocurrency. And I had not really yet really, I'd heard about it, but I hadn't done any due diligence on it. And quite frankly, I was a very poor college student at this point, so I didn't have money to really be investing in the stock game or investing at all. Um, so, he was telling us, like, yeah, man, like, you got to get Bitcoin. Like, this is the next big thing. Like, it's gonna make lots of millionaires and la di da la. And I, obviously, being the naive college student that I was, I blew him off. I'm like, man, what is this dude talking about? Like, he's talking some nonsense. Well, fast forward a decade later, and we saw the boom in Bitcoin. We saw a lot of people become very wealthy off of Bitcoin. And obviously, there's been a lot of other cryptocurrencies that have failed, and a lot of people that have lost money in that. And we've seen that the cryptocurrency market is very volatile and all these things, right? But I think this is an instance. It's very similar, and why I tell this story is very similar to AI, because there are a lot of people that are just jumping into AI because they don't want to be left out. And I think that we're past that phase now where investors are starting to say, okay, show me the money. Where's the money actually being made? We're past the fact of like AI being this new phenomena that we're just going to throw money at and see what happens. Now they're wanting to see some maturity in that space. So, in my opinion, every major innovation goes through this phase. It's the first, it's the excitement, then it's the scrutiny, and then it's the separation between leaders and pretenders. Um, the AI trade in the trend isn't dead. In my opinion, it's just being audited. And when I say audited, that means they're trying to find out who the pretenders are. Who are the ones that are just saying they're AI company for the instance, for the sense of being able to raise capital or being able to say that they're in the AI game. Like who are the ones that are going to rise to the top? There's this, you know, phrase or thing where people say cream rises to the top, right? That's what investors are looking for, right? What is the cream that's going to rise to the top now? And I think that over the next 5 years, we're definitely going to see more AI adoption. We're already seeing it, right, across various realms. As a CFO and an accountant, I'm seeing it in my space. I'm seeing, companies start to really buy into AI and figure out how do we build more capacity by being able to take away some of the mundane tasks from our staff. We're seeing it in marketing where now you can build a marketing strategy with AI in seconds. We're seeing it now also with building technology companies. You can build an app using some of the AI apps to really be able to build yourself a website or build yourself a mobile app. AI is here to stay, but right now it's being audited and we're seeing who are the pretenders and who are the contenders. So I think that's why we're seeing some of these ebbs and flows in the market. So here's one of the biggest misunderstandings right now. People see, obviously the red on the screen. Anytime we see red, we get scared and assume money is leaving the market. And the reality is it's not. It's just rotating. When uncertainty rises, investors often move and from growth to stability, from hype to earnings, from promises to present cash flow. And that rotation can hurt. That rotation can hurt, especially if you're not prepared for that rotation. So it's important for us to continue to have our eyes and our mind to the market to understand what the market's doing because of all of those things that I just mentioned, growth to stability, hype to earnings, future promises to present cash flow, right? Um, all of that can hurt when those things are being rotated across different markets and across different segments. So if you're heavily concentrated in most, the most crowded trades, but rotation is normal, it happens every cycle. A sell-off says, I'm out, right? And that's what we see is when you see a sell-off, it means I'm out. Rotation says I'm still invested, I'm just invested elsewhere. And I think that's where people have to shift their mindset is just because they see a sell-off doesn't mean that the market is crashing. It means that I'm just invested elsewhere. I'm not invested in this space. That could mean, hey, the stock market is down quite a bit and it's a little too volatile for my appetite. I'm moving to bonds because it's a safer play. It could mean, hey, the stock market is up and I see a rise coming. I'm moving myself from bonds so I can be more aggressive, right? So we really have to understand how things are being rotated through the marketplace. At the end of the day, what I call it is it's just repricing risk. And I think, at the end of the day, risk is the core to all of this. Once we understand risks, we'll be able to play in the market, in the stock market better, right? So we should always be trying to understand what is the risk around any stock or any investment that we're making. So let's talk a little bit about the mixed signals that the economy is sending, because I think that that is a core piece also to driving some of the turn and rotation in the market. I think the challenge right now is that the economy is sending mixed signals. The employment rate remains relatively strong, but inflation has cooled, but honestly, not completely. Consumers are still spending, but they're leaning more on credit. And that creates problems for the market. Strong data can mean higher rates for longer. Weak data raises concerns about growth. So instead of clarity, we get tension. And if you remember from the beginning of my episode, I talked about clarity. Clarity is core to us being able to understand all of this. The more clarity that we have, the better that we can perform in this game. And the reality is that we all can perform in this game, and that game is the stock market. Um, the reality is that markets hate tension more than they hate bad news. In reality, when investors don't know which narrative will win, prices swing. The economy, in my opinion, isn't flashing red; it's flashing yellow. So I'm gonna say that one more time, because I know that we see a lot of the red on the screen, and we're seeing the downtrends and some of that. And the reality is that the economy is or like the economy isn't flashing red, it's flashing yellow, which means that it's telling you caution. Move with caution. And when I talk about caution, the caution is telling you to really get back to your fundamentals. Understand why things are swinging, why why people are selling off, why people are moving their money from tech to other parts of the marketplace, whether it could be healthcare, it could be bonds, it could be an EFT, which is maybe a little bit more risk adverse, right? We need to understand when the market is telling us caution, okay? Um, so let's talk a little bit about like volatility as an advantage. Um, I think this is a reframe that many investors miss. Volatility is not automatically bad. Volatility is uncomfortable. But discomfort and danger are not the same thing. And I think oftentimes we uh, put them both in a box and assume that they're the same thing. Um, Long-term wealth is often built during those volatile periods, not the calm ones. The calm ones, we're not seeing those big swings, so that's not where wealth is built. Um, but when there's those volatile periods, that means the price moves faster than value, and always has. So the question isn't, why is this stock down today? The better question should be, do I believe this business do I believe in this business at this price? And that is once I started to shift my mind to what price do I attach to said business, and w- that allowed me to understand at what price am I willing to sell, what price am I willing to buy in, and where's kind of my in between, like I'm at a cautionary period, right? So if you don't need the money tomorrow, volatility can work for you. Volatility doesn't punish patience. It punishes panic. So there's this thing, if you go on CNN, where you can type it into Google and you can look up um the greed chart, right? So you'll be able to see kind of like where people are on this like fear and greed in that pendulum. And that will tell you a lot about how people are responding to the marketplace. So I'll just say this one more time. You know, the better question that we should be asking ourselves if we're playing the stock game is, do I believe in this business at this price? And if you don't need the money tomorrow, volatility can work for you. Volatility doesn't work for you if you aren't patient. So if you aren't patient, volatility will punish you. So at the end of the day, volatility punishes panic. So we're getting towards the end of our segment, and I want to tell you what I believe smart money is doing. And honestly, what are some of the things that I'm doing? I'm not saying that I'm the all I'm omnipotent and all knowing. What I'm saying is that these are some of the things that I'm doing, and these are some of my beliefs on what smart money is doing right now. So, what are disciplined investors doing right now? That should be the question you ask yourself. You can look at Warren Buffett. Like, what is Warren Buffett doing right now? They're not predicting the bottoms, they're positioning. They're dollar cost averaging, they're trimming speculation, they're holding quality. So when I say holding quality, they're looking for those companies with really good fundamentals and financials that they're holding those, regardless if they're down or not. Um, they are holding them. So I'll give you an example. United Health Group. They've been down quite a bit this year, and I believe that they were at one point up to like 600 plus per share, and at one point this year they were down in like I think the 170 to like 200 price per share. But at the end of the day, if you look at that company, their fundamentals, they had like 60 consecutive quarter over quarter where they were in the green, they're positive. And you know, I think that though there's been a large sell-off because of a lot of things have happened, uh, the murder of the executive in New York, their CEO resigns and they bring back their old CEO. Like there's a lot of uncertainty with that company. But what we do know is that they have really good fundamentals and they will figure it out at some point. It's just a matter of can you put your money in there? Are you willing to continue to ride the ebbs and flows? So whether you get in at $200 and then it rides down to 150, are you willing to buy more? Are you willing to double down on that and knowing that hey, in 2 to 3 years it could be back up to 400? Or could be back up at the 500 or 600, right? That is what we call holding quality. And honestly, that comes to my next point, which is staying aligned with your plan. Whatever your plan was, like stay aligned. Once you start to move that pendulum to greed, that's when you start to misalign with what your original plan was. So we need to make sure that we stick to our plan. These are the folks that are not reacting to every headline. They're asking whether anything fundamentally has changed. Most of the smartest moves are happening right now and won't make the news, to be honest with you. And that's usually, in my opinion, a really good sign. So to close, let's land this. Um, you don't need certainty to invest well. You need discipline, you need a strategy. And that still makes sense even when the market gets loud. If your plan only works when everything feels calm, it's not a plan, it's a hope. The market will always test your patience, always. That's why it's the market. That's why there's these ups and flows. It will always tempt emotion, but over time, the market rewards clarity, not confidence. So I'll say that one more time. The market all will reward clarity, not confidence. So if this episode helps you slow the noise down, I would ask you to share it with someone else who's feeling uneasy right now about the stock market. And remember, the goal isn't to win the market this week, it's to stay in the game long enough to win it over time. Because what we know is that the market always returns a profit over time. We just got to be willing to stay in the game long enough to see it. So, with that being said, I am your host, Andre Creighton. Thank you so much for tuning in with me. Um, as I always say, it's not about how much money you make, the power is in how much money you keep. Thank you so much for tuning in. I'll see you on the next episode of Financially Fit.
When she walked in on her first day at Doherty Family College at the University of St. Thomas, she didn't know a soul.
I'm Zion, and I'm a second year at DFC.
A year later, and so many changes for Zion.
I love my friends here. I couldn't do anything without them. We support each other all the time.
At Doherty Family College, Zion also finds support on the academic side. Like all DFC students, Zion can count on a team committed to her success. Doherty Family College is Minnesota's affordable private college option. DFC students earn their associate's degree and then can transition to a 4-year college or university for their bachelor's. Many are students of color or first in their family to go to college.
It's nice to see people that look like you pursuing an education, wanting to succeed academically.
Zion encourages any high school student looking for a college home to do what she did and apply to Doherty Family College.
All the support you can need is here.
Ready to make your move and experience Doherty Family College for yourself? Then schedule your visit to the Minneapolis campus at dfc.stthomas.edu/visit.
Hi. It's easy to just make an ad that tells you to quit smoking. See?
Action!
Easy as that!
Sure is! Yeah!
But let's be real. Quitting is hard. It's messy, frustrating, but every struggle is actually a victory. At Quit Partner, you get free tools from people who get it. We're not going to tell you it's easy, just that when you're ready, you've got a partner to help you get it done.
Especially your first? Well then, welcome home to the Old National Bank Down Payment Assistance Program. We're here to help you from start to finish and make getting a mortgage a little easier. Plus, you may be eligible for up to $15,000 to use toward your down payment. How's that for a little easier? Everyone deserves a place to call home and a bank to help get them there. Connect with an Old National mortgage lender to learn more. Old National Bank. Get old in your new home.